All right, folks. Welcome to this week's first commentary, and I'm feeling very sleepy. I was watching a football match yesterday. Portugal and Spain. So I haven't had enough rest. I had to go through Twitter for the bans and all of those things, and barely slept. Now my eyeballs are a bit shaky. But we'll just go right into business. So last week we were talking about dollar index. I was talking about how this bullish price action was like kind of like a delayed indication that we're going to see high dollar prices. But of course, when we looked at the monthly time frame, we saw last month close bearish, and what I said was, for the fact that last month's candle closed bearish, we're likely to see the early portion of June's trading to be bearish, and the drawn liquidity for that was the previous monthly low, right? And when markets trade through the previous monthly low, exactly, there's nothing I was really interested in, really, because like everyone knows, I'm bullish on dollar index, and from last week's commentary, I was talking about how the markets are likely to trade into this fair value gap here. Okay, so if you go to the weekly time frame, we honestly, last week's candle didn't close as I'd want it to close, because in as much as we keyed off of the consequent encroachment of this rejection block here, and the bodies of the candles are obviously respecting this rejection block and also this down close candle. You can see we closed inside the range of this candle, and this candle closed inside the range of this candle, and also the rejection block. We're seeing the market respect this kind of raise, and we're just saying the wicks go through around this price point here. But I would have preferred if we saw like a bullish closure, because post non-farm payroll I was seeing energetic runs in price action, and I wanted to see that continue to the end of Friday's trading. But of course, the markets will trade however they want to trade. Your opinion and your feelings don't really matter. In fact, don't matter. It's not like it don't really matter. It doesn't matter at all. And that's why over the years I've studied price action with respect to data, right? I try to eliminate as much self as possible, because I don't want to look at the markets and just have my own feelings based off of the concepts. I want other things to define narrative in my head, to define bias in my head, to define like the drawn liquidity in my head. I don't want to be the person responsible for all of those decisions. Okay, I want the market to give me signals that okay, we're bearish. Now look at candlesticks and premium and discount, and see how you can build a narrative around that bias. Okay, so however, we got this closing on Friday, and markets open this week, and I've seen that the markets open bearish on dollar index, and it shouldn't be scared, because we already know how candle closure affects market opening or affects the previous candle. But still, on the premise that the high time frame institutional order flow on dollar index is bullish, and it's not me. Okay, and I'm seeing signs on the weekly time frame that we are likely to see higher dollar prices, and the yen markets too are looking bullish. So I think everything put together is giving signs that dollar index is bullish. So we're going to go through the daily time frame, because there isn't so much on the weekly time frame. We've already keyed off of the key level here, which is the consequent encroachment of the weekly rejection block, and we're seeing the market draw inside the wicks and the bodies of this candle, the body here, the body here. We're seeing the market draw inside. So we're going to go through the daily time frame to see if there's anything on daily time frame that can mean bullish for dollar and bearish for foreign currencies. So on the daily chart, okay, on the daily time frame, okay, first off, the first thing that caught my eye during the weekend is that this candle here, this candle here, this candle closed above these two candles, so that's a change in the stating delivery. Okay, and when I see a change in the stating delivery, this swing point here is high probability, high resistance, and you can see we had a low here, one, we had another low here, two, and we had the third low here, which closed inside the range of this candle, okay, which gave off the buys on Friday as bullish. Okay, so now that we've seen the markets close, outside these two candles, that's a change in delivery on the daily time frame. So it makes the swing point high probability. So now that we've seen the markets returning to discount, what I want to note, okay, what I really want to note is here, because I think the market traded fairly closely to this level. Okay, now this is the order block and the markets are trading inside the order block, but also this last down close candle, okay, if the market return here, that's an immediate rebalance, okay, and we're supposed to see a quick rejection off of this level here. So I needed to show on the hourly chart, so we can look at the hourly time frame and define our thought process. So now that we have changed in delivery on daily time frame, my expectation is for dollar index to run higher, and my weekly bias is bullish. So, but speaking about weekly bias and trading the weekly range, if we look at the EC on dollar index, particularly today, there's nothing. Okay, there's nothing on the EC. Bank holidays for the euro, and nothing on Tuesday. So it's likely business begins Wednesday-ish. So if you're excited to start this week off of an execution, especially working with your day trading models and stuff, I think I would suggest you just chill out till Wednesday, because you're not going to be missing anything out. Trust me, you're not going to be missing anything out until Wednesday. Okay, and even Wednesday's got to be post CPI, except if probably you're trading off of the high time frame. Okay, that's the only way all of these things don't apply, because time of day of week really applies to say day trading. You understand, if you want to be very precise. But if you're trading off of the high time frame, you can get in on Monday and probably hold through the consolidation until the market actually moves. Okay, that's the difference. That's the distinction and point I'm trying to make. It doesn't mean you can trade off of the high time frame on Wednesday and you are a swing trader or short-term trader, but those types of traders, there's a level of what's it called, I can't find the word in my head, but the earlier point I was making is that if you're day trading, you have to adapt to these rules. Okay, you can just go in and you expect the markets to do something because of the news event coming in the later portion of this week. So it's likely the weekly range is going to be very manipulated. Likely. We could see Monday, in fact, form the low of the week, or we could see Monday consolidate and have Tuesday trade accordingly. That's very, very possible. But based off of the kind of things I know and my experience, when I see the EC lined up like that in the later half of the week, I'd prefer not to do much or do anything until the later portion of the week. And that's how it is. And the truth is, you're not going to miss anything. You are not going to miss anything. So we see the markets open. The market's been aggressive. Wow. Okay, I think we've seen very aggressive opening. Okay, and this is the breaker. So this was the auto block I was talking about on Twitter on Friday, and when I was talking about, everyone to reference the auto block on the 4-hour time frame, this last two down close candle, and the markets returned into this candle and expanded higher. Okay, so that was the setup on Friday. So of course, now we've seen the markets open and just dump. All right, and I'm not going to reference this auto block. Okay, I'm going to reference the breaker. Why am I referencing the breaker? It's not only for the fact that it's the previous day's high. Okay, it's because now that we have a fair value gap here, and you can see if you look closely here, you'd see this candle, this up candle prior to this consecutive down candle comes before this down close candles. Okay, so that's the breaker here. So the breakers take priority over the other block, okay, in the PDR metrics, because I've been getting lots of questions, not from one person alone. Multiple people ask me, send me text on Twitter, on my DM, and say, okay, Settle Black, what's this? How do you mean by this? Why is it this and stuff like that? So now that we have a fair value gap here, ideally, the fair value gap takes precedence over this consecutive down close candle. But because of the way the market's been aggressive overnight, okay, this is the Asian session. We've seen the markets, being very aggressive. I don't know why dollar index chose to consolidate the early portion of Monday's trading, and because the way the markets closed on Friday, it seemed like this is the kind of price action we'll be having, like markets trading to this gap, and the markets just expand. Because over the weekend I looked at the markets too, and I was eyeballing this fair value gap first, but obviously I made considerations for the markets trading into this breaker, because I know if the markets could consolidate, if the market consolidates, especially if markets consolidate this week, we could see markets spend around a lot of time around here. So markets could reject and return back here, stay around here for a while, and before markets finally expand. But the key level for reference is Friday's high, which is the 4-hour breaker. Okay, no more this fair value gap, because we have the luxury of the Asian session. Okay, the Asian session, we can see the market just dump. Okay, and we have the previous day's high here and the breaker here. So I'm bullish on dollar index. Okay, we have a market structure shift here via the change state in delivery, and also we have lots of buy side objective. But the truth is, we haven't seen any higher time frame, I mean the daily, say the weekly time frame validation, because last week Friday gave off something for dollar index for us to be bullish this week, and that's the market's closing above these consecutive up plus candles. That's the only thing. Okay, so this sort of validates our weekly buys, but on the monthly time frame there's still nothing on the dollar index. Okay, apart from the fact that high time from institutional order flow is bullish, and because of that, a run below the previous monthly low, I'm going to interpret it as turtle soup, and I'm thinking the markets are going to draw into this fair value gap here. Okay, so we're still below key resistance level, like that monthly, like the monthly, fair value gap there, the inverse fair value gap, and last week's price action closed bearish, so isn't very strong indication. It only means that okay, a good rejection, but markets are likely to still very subject for the early portion of this week's trading. So that's why I'm advising that folks should begin looking at sustainable price action from Wednesday's trading post CPI, right? So on Euro USD, we were talking about the rejection block and saying this run higher. Okay, it's a reaccumulation, it's a premium, and we saw last week's price action, markets rejecting from the consequent encroachment of the rejection block, and all we want to do really is what's the market's going to do. The same reference I made last week was when I said everything would be in a clear once we are below this weekly fair value gap. Okay, this is a very key level on Euro USD. So while I'm bearish based off of the high time from institutional order flow, I recognize levels that would serve as support or resistance, and so that I can think properly and I can manage my expectations properly. Okay, so we are opening the weekly opening range is bullish, and we see the market, unlike dollar index, which actually had a daily time frame change in state in delivery. Okay, we don't have that yet on Euro USD, but because of dollar index's driver, that's pretty much acceptable to me, and I'm still able to manage my emotions off of that fact. Okay, and we have a swing high from here, and whenever I see a swing high, I want to see the market return into the top candle slow, right? So it's just a normal, it's a price, is a pattern in price action. Okay, so drawn liquidity is previous day's low, and what I want to see is that when prices trade below previous day's low, we can trade below these consecutive up close candles, so that we have a change in state in delivery on daily time frame on euro, and then we can speculate on more downside, because once we trade below previous day's low, which is Friday's low, and close below this consecutive down close candle, a return back into this up close candles, this up close candles would signify sell side for me into this low here, and whoever buys sell side objective, I'll go on my chart. Okay, and if you want to look at sell side objective I have on my chart, okay, I have this level here. Okay, we have an old CB here overlapping an old BC, so we have a balanced price range. So this is my weekly discount price objective. So that's how far I think the markets could go for now, because of the high time frame is bearish, and I know if the markets are being one-sided, the markets are going to be one-sided for a while. So and I understand that markets are going to seek liquidity, okay, not just here, okay, because this would just mean a market structure shift if we can see the markets trade below here. So markets are going to seek liquidity here, and also trade into this inefficiency here, this balanced price range, and this is just below equilibrium of the range, which was the things I was talking about. So on daily time frame, we have the order block, and we're seeing the markets trade respect the order block, the early portion of the Asian session. Okay, that's this rejection here, but we want to see the markets actually sell off. Okay, we want to see the market sell off, and that's basically it. I'm bearish on Euro USD. I've been saying it for weeks now, and I think what Friday's trading did was give us a sign that we're going to see lower prices in foreign currencies, and we still need more of these weekly candles to validate our buys, the high time institutional order flow, and which was one of the things I was saying last week, saying that just the way the daily time frame validates our weekly buys, just like what we're seeing here, we need weekly time frame to validate the monthly buys, and obviously the monthly buys is long-term buys. Okay, weekly buys is short-term, monthly buys is long-term buys, and that's it. So we're seeing signs, but nothing exactly imprints the fact that based off of market structure, that Euro USDs would resume the bearish run. Okay, long-term bearish run. But I'm still bearish on euro, bullish on dollar index. Dollar index also giving signs that we're going to see higher dollar prices, and I'm just gonna wait and see how price action develops around here, because we are in a discount and a change in staying delivery here. So I'm just gonna watch. So so during the course of the week, I think we'll talk on Twitter, and have to drop my opinions again online. But today, it's just gonna be waiting. We're just gonna wait to see what the markets are gonna do, to see if the markets are gonna validate the weekly buys by closing bullish, or the market stays in consolidation, or whatever happens, right? So until I see you in the next one, be safe.